Hey, welcome back to the Mining Pod. On today's show, we're joined by Rapha Zagury. He is the head of mining at Swan Mining, also the CIO at Swan. Swan Mining is a new project that just came out stealth with 4.5 exahash under deployment. They're targeting 8 exahash here in the near future. Go through all the hot questions on Swan Mining. Thank you to Swan for making this possible. We also like to thank Foreman Mining for making the show possible. You'll hear from Foreman a little bit later in the episode. I also like to push people to our newsletter, Blockspace Media. We have a really interesting report that we're talking about this weekend in that newsletter from SDM Secure Digital Markets. So go check out that newsletter. You can subscribe today at blockspace.media, or you can go and read the newsletter there first. And if you don't like it, you don't have to subscribe. But I'll tell you, it's pretty good information. So go and subscribe. Okay, a few words from our sponsors, and then we'll jump into the podcast. Want to mine Bitcoin? Gator Mining offers premium hosting with as low as 1 unit per client, 95% uptime guaranteed, no curtailment, 24/7 monitoring and maintenance, in-house certified repair center, clean and renewable energy, all at competitive market rates. Work with an individualized team to get hash rate flowing your way today. Gator Mining, pioneering trustworthy crypto hosting for optimal mining success. Contact Gator Mining today at gatormining.ca. Bitcoin miners, be prepared. Hash rate is moving upstream towards power plants and low-value energy. Don't get cut off. Modernize and mobilize your Bitcoin mining fleet today with Upstream Data's high-performance load centers. Plug in Upstream Data's hash hut and monetize surplus wind power reliably in the blistering heat of West Texas. Plumb in hash generators and safely convert natural gas into cash in the frigid winters of northern Canada. Upstream offers high-quality load centers that will help you mine Bitcoin safely and reliably in every application and climate. Mobilize today and start mining upstream at upstreamdata.com. Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Welcome back to the Mining Pod. Today we're joined by the CIO of Swan, Rapha Zagury. Welcome to the show. Really excited for today's conversation.
Thanks, Will. Great to be here. Listened to a lot of your episodes, man, lately as we got into mining. So very happy to be here now.
Yeah, I mean, you guys got everyone flat-footed. Like, let's just be honest. I had heard rumors of Swan getting into the mining game for a little bit, but I never knew what the size of it was going to be, if it's just going to be a hosted model. We've seen it like with Compass or River or some of these other financial services out there. Maybe River is probably the best example. But you guys went for the whole thing, 4.5 exahash, going out stealth mode, plans for 8 exahash, and then even a future announcement or pre-announcement to go public in the future, which we've certainly seen a lot of mining companies go public. Like Grid got listed on the NASDAQ last week. So I'll hand it over to you just to kind of lay the table for us. Your background, yourself, and then let's go into Swan's pursuit of Bitcoin mining.
Yeah, very quickly on my background, because the interesting story is not about me, it's about what we've built. So I made a career in financial services, worked at Wall Street for most of the time. So worked at Goldman, Merrill, Deutsche Bank, mostly doing trading. So did all different kinds of trading, fixed income trading, derivatives trading. Then 2016, moved back to Brazil, where I'm from originally, started 2 companies here, an investment banking company, and then also a lending fintech. Love technology from a very young age, started coding really, really early. And I think I'm one of the few bankers that loves to code, which is definitely a very rare breed. But it gives, I think it gives me an unfair advantage in a couple of things. Being in Bitcoin for a while, I think part of coming from the technology side, caught my attention earlier on than most people. And been thinking after I left my company a few years ago, I've been thinking what to do. Bitcoin was an obvious place to put my energy on. Coming mostly from the monetary side of Bitcoin, I was looking where I could help, but also coding, as I said, has been a passion. So started a couple of open source projects, contributing to different open source projects out there. Fun fact, I was an early contributor to Spectre, which then actually ended up at Swan, and is part of our company as well. So knew Moritz from back there. Started an open source project back then to do like a portfolio analysis that kind of morphed into a Nakamoto portfolio, which is something that Swan has developed as an open source tool for people to see how Bitcoin would be in their portfolios. Again, through the interest of Bitcoin, was like everybody else very active on Bitcoin Twitter. Met Corey there. And when Corey mentioned something around, he was looking to, build up Swan, sent him a DM. And this was pretty much a little bit longer than a year ago, like 13 months ago. And what a ride it's been. Like in any startup, you're trying different things, you're going different directions and seeing what will stick, what won't stick, right? Then I'll tell you the story about mining, because that's a part of that journey of trying to, develop Swan, rebuild Swan, and getting to where we are.
Awesome. So for your background, like financial services, how does that fit into mining for yourself? Like, is this still like you're learning kind of on the go through this? Obviously, you have like a deep background in financial services and can kind of pull on that. But what was it like to kind of jump into the mining seat, which is obviously a very difficult job? It's super competitive.
Yeah, and I think when you think about mining, right, one of the biggest inputs of mining is capital, right? It's fiat. So that part I understand really well. I've raised capital for my company. My company went all the way to Series D when I raised capital. So I've always raised capital, and investment banking also. That's pretty much what we did. So that fits right into mining. I'm also very data analytical. I love data. We've developed through the last year, we've developed a data analytics tool that it's, probably, and we hear this from other people that have seen it, it's probably one of the best ones out there, which look at everything, all the way from the ASIC level, how much hash rate we're deploying, how much we expect to be receiving, how much we're actually receiving. So, it fits right into my background. I think it's a mix between technology, money, coding, all the things that I really like about. And I think this is one of the reasons why, Corey gave me the opportunity to really grow this business and to get to where we are.
Gotcha. So talking about Swan itself, tell me how you guys are thinking internally about this project. I saw from the announcement that the mining arm is going to be a sister entity. You guys made some pretty declarative language there about how mining is very capital intensive. There's certainly like a lot of debt involved in these sort of operations, and you guys want to be very clear that like the financial services side of Swan and the mining side of Swan are like separate entities, and they can't really like pull down on one another. I'd be curious to know like why you guys did that or how you guys are thinking about it, but also like what are the upsides for Swan to be involved with a mining company, and then how it benefits the mining company to be attached to a financial services company like Swan.
So through the last year, right, we've been thinking about how to diversify sources of revenue for Swan. And historically, the business that everybody knows Swan about for are twofold. The one is the media part. So we have very strong media presence. People know us a lot. We have a very strong brand, right? But then in terms of products, in terms of revenue, the only revenue vertical that we had was selling Bitcoin. So clients actually, and only one directional, because we don't have a sell button in our app, by design, feature, not a bug. So clients can only stack Bitcoin with us, right? Which, if you compare with other exchanges that have buy and sell, we're foregoing a lot of activity. But as I said, feature, not a bug. So as we looked at that, and we know that's a business that ultimately fees are going to go to zero, right? And actually, we are going to be the ones also helping to drive fees to zero. So as we do that, we started to thinking about, okay, so if we really, because the goal of being a public company came before that. We think it's super important for a Bitcoin-only company to become public, not only as a statement, but to prove also that, this is a business that long-term, if you're focused on Bitcoin only, you actually can get something out of that. And that hasn't happened before. That's a key differentiator for us. Most of the companies that went out there, they weren't Bitcoin only, right? And they were doing other things. So to do that, we started brainstorming a lot last year around, okay, so if you want to diversify sources of revenue, where do we go next, right? And we started expanding first the financial services model. So we went out to cover financial advisors, for example, right? And to look at what they were doing and seeing how they would fit Bitcoin in their portfolio. How does it fit on an overall asset allocation, right? That's been part of what we did last year. We also expanded into other retirement accounts, right? It's another vertical. It's still kind of like in the same bucket, but another source of revenue. So we're going from revenues that are spotty trading to being more, long-term fee-based, which makes the business more stable. So we did all of that. But then we started to look, mostly driven by feedback from our clients and people out there into looking at other things. So lending was one of them. A lot of people asking us about, okay, so I have Bitcoin. I don't want to sell Bitcoin. I don't want to rehypothecate my Bitcoin. Is there a lending solution out there that you guys could offer that, there's no rehypothecation, the rates are fair rates, and I could just use my Bitcoin as collateral? So that was one of the areas that we looked at, right? As I said, I started a lending fintech, so that was one area that also caught my attention into going towards. And I also think that through same thing, it always goes back, I think, to the power of the brand, the power of knowing people, the kind of flow that comes to us. So we see a lot of deal flow, and we see Bitcoin companies coming to us all the time and saying, and just either asking for advice, looking, we're looking to raise capital. How can you help us? If you look at the system, other people that we should be connecting with, right? And we leverage our network and other people that we know to kind of make the connections. So Swan Institutional was born out of this, from the connections that we have and the people that we have. And at the time, we didn't know it was going to be Swan Institutional, right? But it started growing like that. So as I said, lending was the first vertical. Then we started looking into investments. There was one specific company that came to us, which was a mining company. So back in around June of last year, they came to us, like looking to raise capital. And then through the process of due diligence, of understanding the company, looking at what was happening, there are a couple of things that really caught our attention. The first one, when we look at the cycle of where we were, not only in Bitcoin price, which is the obvious one, but also on ASIC prices, right? When we started to see the prices in dollars per terahash of the ASICs back then and where they were in 2021, right? That really caught our attention. And like, well, maybe we should just buy ASICs and, just warehouse them and wait for prices to go up because they're dirt cheap right now, right? Again, this was middle of last year. I would say this is probably where Swan Mining started, right? We just had this idea, okay, let's go out, let's raise capital, let's buy ASICs, right? Similar to what Adam Back has done, I think, with their basic nodes, right? That was, before they launched that was something that we were working on and we were looking at, but mainly directly into the ASIC opportunity, right? So this is as you asked me, like why to go on stealth mode, this is the main reason. So when we started buying ASICs, right, first of all, we didn't know how much capital we were going to raise. We went out and, we were very impressed by the appetite of investors to actually get into something like this. I think, Bitcoiners want to invest in the Bitcoin ecosystem, and there are very few opportunities out there. So when there's something that, potentially has good ROI, potentially good diversification to what they're doing, right? And on top of that, help the network, that makes perfect sense. So we, to our surprise, we got very good traction in terms of capital raise. So I said, okay, so let's go out and buy some ASICs, right? So we went out. We didn't want the market to know that we were buying them because as soon as the market knew, probably prices would start to go up. And we started accumulating ASICs. We bought, mostly in the beginning S19 J Pros, which is still, one of the machines we like. They're not the one that we like the most. And I can get into that in more details later. But that's what we did. And then after we bought the machines, right? And the whole goal was, let's buy the machines, let's wait for prices to change, and then eventually you may sell them. We started to think, well, if we have the machines, right, and they're sitting here, the opportunity cost is massive, we should just deploy them. And again, goes back to the same thing, having good relationships in the industry and people that know as well. We have people that have been in mining for a while that know a lot of the operators out there, that know the sites out there. we call them up, say, okay, so if we have ASICs to deploy, where should we deploy, right? And I said, well, there's this opportunity here with this host, with that host, with that host. So start having calls, started deploying some hash rate in some of these sites, right? That led, I think, to, we're starting to see some revenue out of it. That got our investors even more interested on it. As soon as you start seeing Bitcoin being mined every day, it just gets a little bit more exciting, right? I think this is one of the beauties of mining. It's very, your rewards come very quickly. You deploy the capital, deploy the hash rate, plug in the machines, and right away you're actually earning Bitcoin, which is it's very different than a lot of cycles that we see in other industries, right? So we started deploying, and then I can get in details like, how we did the deployment, how we made sure that, and this was also another reason why we wanted to do it in stealth mode, because as we were going to these operators, right, as soon as they knew it was Swan, they would probably jack prices up, right? And so coming in as a different company, as a subsidiary, right, there were a lot of NDAs that were that were signed, as you can have an idea, right? We're signing NDAs, with pretty much everybody that we're talking to. And this is actually to our surprise. We were pretty sure this was going to leak out at some point. And we were also pretty sure that, as soon as we started talking about our numbers and Swan Institutional, that somebody would figure out that, this was all coming from mining. Again, to our surprise, it didn't. People guessed all different things, and mining was the last thing that they were looking at. I still think mining is one, I still know a lot of people that have been in Bitcoin for a long period of time. They don't get involved at mining at all, right? So it's kind of like almost this separate part. I'm one of those. Like I've, been, as I said, in Bitcoin for a long time. Actually tried to help on the Bitcoin code. Was really deep into it. But mining, I mined a little bit, a while back just to see how it worked, and then just put it aside. Primarily because it's not economical, to mine in Brazil. But anyway, it's just now it's when I'm really deep diving into it. And I think there are a lot of people like that. So it's not natural to make the connection, right? Talk about the Bitcoin. And also it's a Bitcoin financial services company, right? So it's a little bit afar, even though the more we look into it, the more we see that, the business are extremely complementary. They make a lot of sense. Everything that we do at the end of the day, it's to help the Bitcoin ecosystem. And mining couldn't be better for that. But I'll stop here and I'll see if you have more specific questions. The story has a lot of details that I left out, but this is how we got here.
Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry. Yeah, I definitely have questions. So let's go back through a little bit and talk about the genesis for this idea. Last summer, you guys are looking at the ASIC market. You guys are picking up S19J Pros and other similar units. How are you guys thinking about your ASIC strategy, noting that yes, ASIC prices were cheaper, but those were typically units that were maybe not as efficient or going to halvening. A lot of these units were kind of dumped out to the market for a specific reason.
Yeah, I mean, we went through all of that. And this is one of the reasons why we picked, mostly S19J Pros and with ratings above 100. And more recently S19Ks, because we think these machines are efficient enough that, even through the halving, at the end of the day, right, what you need to be worried about is three things: is cost of capital, right? So if we have cost of capital that it's okay, we're not paying extremely high interest rates. And I didn't get too much into detail that, I'll come back. Energy prices, right? And then efficiency of the machines, right? So if we get energy prices, they are fairly low that we're comfortable with, right? And this is all math at the end of the day, right? We plug in into a model and we can see, okay, so after the halving, how much are we making on these machines? As I said in the beginning, we like to measure everything. So We have different models to price all of these things in different stress scenarios of Bitcoin price, difficulty, everything else. But this is not complicated. This is pure basic math at the end of the day, right? And as we looked at these, the J pros with the kind of electricity that we're getting, the price where the machines were, it just seemed they aren't great, but they were okay, right? Particularly with the prices that we're getting there in the very bottom of the price market, right? So these are machines that were trading, as I said, more than $100 per terahash. And again, earlier in the cycle, the machines were more efficient, difficulty was lower back then, but still, now they were trading at the low teens, so significantly discounted from where they were. So we have an advantage also that since we were buying our fleet last year, different than most of the miners out there. Most of the miners out there had to buy not only more expensive machines, but also, they went through a cycle where Bitcoin price went down, right? Where interest rates went up. So it was like disaster scenario for most of the miners. So if I can control few things that you can control in mining, right? So if I can control our energy costs, make sure that the energy costs are low enough, and also our cost of capital to make sure that the cost of capital is controlled, is not going to break us, then we have a winning solution, right? I know that with the kind of structure that we have right now, or even going through the halving, the cost of capital is not going to be a significant impact to us, right? It's very different than a miner that goes out there, raises capital, raises a debt, for example, and needs to refinance that debt throughout higher or lower interest rates. So they're all subject to that. Knowing if you're in the bear market, nobody wants to touch miners, right? So it's harder to get investors interested, right? Or you go the other route, which is you're a public company and you have to issue more shares, which is, it's the right thing to do for these companies. There's no question about that, right? But it's done at the cost of dilution for everybody, right? Including the mining teams that are working on there every single day. So,
one other quick question on ASICs. When you guys are working with brokerage services to procure these ASICs, was it mostly like teams in the US? Is there any teams that you could name? And then secondarily, do you guys have any relationships with some of the manufacturers like the Bitmains, the MicroPTs of the world, or are you guys mostly focused on the secondary market at this time?
Yes, and yes. Like one thing that you will see in everything that we're doing, since this is fairly new to us, we're trying everything. So we've tried different ASICs, we've tried different brokers, we've tried different areas to acquire the ASICs, right? You don't go to zero to pretty much, we're actually very, very close to 5 exahashes. I've been watching my screen all day to see if we break 5 exahashes today. We haven't yet, but we're very close. But you don't go from 0 to 5 without, with one single path. So we had to go different paths. We had to find, things with different people. As I said, one of the key things that really helped us is to have a strong brand and to have a very strong network. So a lot of people that came to us again, right, and said, yeah, no, I know this person or that person, and I know how to get there. So that was extremely helpful in acquiring the machines. This is a long way to answer your question and not really answer it, but not giving too many specifics. But it's the truth. Like we've tried a little bit of everything.
Yeah, it's okay. No one wants to give away their vendors, but I have to ask because people want me to find out that information. Let's go over and talk about the JV partners you're working with. I believe in one of the announcements that there was talk about a JV partner. And then past that, there was certainly the look like there was other entities involved with this, whether you guys are hosting or whether you guys are just like using someone else's infrastructure. So can you lay out how you guys are working with this 5 exahash or almost 5 exahash that you guys have online right now? What does that consist of? And who are some of the partners if they're publicly available to be named?
Sure. And I'll go through our rationale behind this, and I think it will make sense. So as I said, very important for us to control energy costs, right? So as we approach like the first site, we went through the first site, okay, we want to deploy some machines with you. Let's take a look at the economics. Let's take a look at the hosting agreement, right? And they came back to us, initially with something like, I don't remember the numbers. The numbers are not exact, but something like, 7 cents for energy power, right? And like, yeah, that's not going to work because it's, after the halving, we're not going to be breaking even. Remember, this is when Bitcoin prices were also a little bit different than we are at right now. So through the negotiations, we said, so what would happen if we gave you guys a little bit of our profit, right? So let's say we give you 10% of our profits in Bitcoin, and you just pass through your energy cost to us. And that resonated well with that host. They liked that idea, right? For us, it's better because, again, it makes sure that even after the halving, we're going to have very low energy costs, which are half of what we were seeing before. They're happy also because they get some Bitcoin, right? I think the interests are much better aligned. As a Bitcoiner, this is one of the things that we're always trying to get, is to make sure that alignment of interest is there. Because if the alignment of interest is there, things just stand in the long term to work better. We're all rowing the same direction. They're not trying to jack up prices too much. The prices are going to be passed through anyway. They want to make sure that the machines are running efficiently because, if we have higher uptime, it's better for them because they actually get more revenues out of it. So in this specific case, it just made sense to do, revenue share agreements. And this has been, I think, the case for most of the sites that we've been in. I would say that probably, 70% of our sites right now have some kind of form and model of revenue or profit share agreements, right? But I think the flip side of that, which is really good, is we get very low energy costs. The bad side is we let go some of our Bitcoin, which is the most valuable asset in the world. But again, everything in life is choices and break even. So when we look at the different scenarios where Bitcoin price could be, right, and how much we're really foregoing here after halving, it's a much better risk. It doesn't even compare. It's a much better risk reward to do, I think, structures like that. As you can imagine, like we were looking at operators that had a lot of capacity. We started smaller, we started with size, smaller for what we were doing. So we started with size that, had 10 megawatts or so. And we went all the way to sites that are close to 100 megawatts in capacity for us, right? So, and then everything in between. So geographically, we're mostly in the US right now. We're expanding internationally as well. We have, signed agreements to deploy in a couple of other countries, which we will eventually, I think, announce, soon. But again, these deals are still in the works, and in the U.S. across different regions. So, the main places as people would expect like Texas, right? But then in other areas as well.
Gotcha. For the debt side of things, I want to go back to that really quickly. My understanding is you guys raised from debt to get this going for the mining side. At the same time, you guys recently, Swan itself had a fundraising announcement, and there was no name attached to that announcement. Are these the same announcements? Like, was the debt sort of the raise and the raise sort of the debt in this situation, or are those separate and distinct?
They're separate. So let's go through the mining vehicle, right? So the mining vehicle, completely segregated from the financial service business, right? It's a standalone entity. There's, no cross collateralization between both of them, by design. We raise capital for that entity. And I think this is, when having some sort of Wall Street background helped, because we built, instead of just going out and doing the traditional debt-only structure where most miners would do, right? We did a kind of like a hybrid structure where, there's no carry, and we share the profits with our investors, right? So again, very similar to what we did on the hosting agreements. We just similar thing in our partnership investment agreements, where people are just deploying capital with us. If this works out, they get priority payments, but then the profits are all split between all of us, right? Going back to alignment of interest, in our side, that aligns interest with investors extremely well, because we want to first make sure that they get the investment back, right? And second, we optimize for upside to make sure that we can get as much capital out as possible for them. So again, alignments are interests are aligned, and things should work much better that way. Separate from that, so again, this is for the mining business. Separate from that, Swan did a much smaller raise into a convertible last year. I mean, this is just for the operational part of the business, for cash burn of the business. We are preparing for a bigger raise. Still not 100% sure what route we'll do. But as you said in the beginning, I think long term, we know what we want to do. We want to go public. So we've been working actively to get the company ready for that, getting auditors, setting up the finances in place, organizing everything, all that fun stuff.
Fun stuff.
So that, yeah, so that we get ready for whenever we go public.
Gotcha. Okay, we'll get to some public questions at the end of the show because I definitely have a few there, including some that some listeners sent in. I want to ask about the JV one more time, and that's Tether has come around as a name that might be involved with this. You guys have not confirmed or denied it, but there's definitely been like the announcement with Tether a few months ago where I think they raised like 500 million or something like that, or they put 500 million aside for mining. They have the interest in Northern Data. It seems like to be a very similar play to you guys. Can you confirm or deny that Tether is involved in any of this, or is that something you're able to speak on?
Yeah, I mean, people have speculated on a few names that are investors, right? Definitely Tether is one of them. Like we don't like a private, and even as as early public company, like disclosing cap tables is probably one of the last things you do, right?
Yeah.
Capital is the heart of what we do. Is probably the scarcer of the raw materials that we have into mining. So, we don't disclose our investors list and, who they are and where they come from for obvious reasons. It's not because we're trying to be shady or anything. It's just that, this would be giving our trade secret away. And there's no upside on us in doing that at this stage, right? When we go public, of course, then we're going to have to disclose everything. Everything is public. Everybody knows everything about what we do. I would just say that, people draw super interesting to see all of this unfolding from my seat because, I've seen people speculating about what Swan was doing. I've seen people speculating about, Corey's announcement from the beginning. And there are things all over the place, right? And some of them are true, some are not, right? But people would just say stuff with a lot of conviction when, sometimes they're right, sometimes they're not. It's just a pure speculation, right? So yeah, I mean, that's as far as I would go about talking about our investors and our investors. Even if I wanted to, a lot of our investors don't want us to disclose their names, right? Which is also very typical, very standard in the capital raising community.
Definitely. But as a mining podcast, you got to ask the question, right? We had Paulo and Tether on the podcast a few months ago. That was a great episode indeed. But thanks for taking that question.
I love what he's doing. Like, everything that he's doing on peer-to-peer communications, that's super important. And they're good. Like we want more miners in the industry. They've been close to home, looking at projects in Latin America, in Paraguay and other places. And so this is awesome. This is what we want. We want more miners.
More competition, but friendly competition. Let's talk about a few more operational things now that we've kind of gone through that stuff. Energy mix, energy costs, pool decisions. You guys had the ocean pool graphic up on Corey's Twitter account a little bit ago. Can you give us some of the finer details for the mining operation itself?
I'll leave the pools for the end because that's a super interesting discussion to have. I could talk just about that for a full hour of the data analytics that we've done, but I'll leave that to the end. Like in everything that I told you, like we've tried everything. So we've tried different energy sources. We've tried different hosts, right? We tried different containers. So we have stuff in one-phase immersion. We're working on having two-phase immersion. Have a lot of stuff in air, of course, right? There's a little bit of everything. There's been some positive, some negative surprises in this whole process. A lot of it, I think, unfortunately, are host-related, right? So if you have a very good host that is helping you, that is working with you, that have very good team on site, that know what they're doing, things just flow much easier regardless of the kind of structure that you have, right? Immersion on immersion doesn't matter. While if you have, a host that is not really well prepared, not well staffed, right? we had sites that we're actually having to send people there to do their jobs, right? But we have no alternative. If we don't do that, we're not hashing, and the opportunity cost of not hashing, it's always high. Before the halving, every day that we lose on hash rate, it's massive, right? By the way, this is one of the reasons why I started talking about this and I didn't. Bigger reason why we rushed and we tried to deploy as quickly as we did was because we wanted to anticipate the halving, right? And try to get as many machines hashing as we could before the halving. We made some calculations like early on, we figured out that, even if we deployed suboptimally in a site that would give us, it's not that, but I'm excited, would give us like 80% uptime, right? We would still be better off than waiting 1 month or 2 months, right? I remember looking at the beginning and seeing some of the charts of, how long Marathon, Terrible, all these companies took to deploy 3 exahashes, and just sweating, saying, these guys, it took them a year, longer than a year. How are we going to pull that off in a couple of months, right? And we did it because, we were able to, we knew that we were going to have to compromise in some things, and that was fine. And our uptime has been now, so the first phase was just deploy. Let's get the machines out there. Let's find the hosts, right? Whoever had capacity that we thought were operationally good, we just deployed with them. And then after we did that, now we're going for optimization. So we're getting closer and closer to each of these sites to getting to 100% of uptime. Big part of that first is just, physically going there, making sure the machines are well installed, that the cooling conditions of wherever they are good, right? So, basic structure, but then also on the hardware side, so going, and the software side, right? So going out there, making sure that we have the right hardware for the site, and that we also been trying, like everything else, very different firmware solutions, control board solutions to find out what works best, right? And it's not clear cut. Like it's super interesting to see that we have firmware that's performing really well in some sites and it's not in others. Go figure why, because there's so many variables that impact mining, right, that we're learning. Sometimes it's like a small draft of air coming somewhere and then the machines operate completely different because of that, right? And that just throws things completely in opposite directions than you would be expecting. But anyway, so we've looked at different solutions there. And we've been testing a couple of them and getting, like, one of our top sites now, we are at 95% or 97% actually of the machines are hashing. And we are at 104% of the expected hash rate because we're overclocking the machines. We're able to get, without compromising too much efficiency, which is what you want, right, at the end of the day. So, yeah, we can go into the pools after this, and then I'll tell you a little bit about our journey with pools, which that's a story by itself.
Definitely a big topic end of last year with Ocean Pool and Demand and a few other things launching. Just to wrap up the ASIC size stuff, if you have any info on energy costs or energy mix, that'd be interesting. And then also if you guys are pursuing hydro and or immersion tech.
Yeah, not hydro. Definitely immersion. In our international expansions, we're looking at places that are fairly hot that would be impossible to run anything else. So we're definitely super interested in immersion. As I said, we've been looking mostly at one phase right now of what we have, but we are extremely interested in two-phase immersion. I know it's early. I know there are a lot of flaws with the technology. I know there are a lot of things that still need to be proven. But in the future, I think when we look, a lot of people talk about this. I'm not saying anything new, but if you look into how mining is going to be, 5-6 years from now, it's probably going to be very different than what it is right now, right? So the way the mining sites are configured, the way the machines are configured, the way they are set together, right? And who knows what's going to happen because technology, has a huge random component in how it develops. But I can see a future where immersion is really, really important in what we do because you get, a lot of machines together, you control your environment much better, right? And I think we're going to get to a point that it's going to be much cheaper and it's going to be much more efficient to deploy that way. Is it true right now? No. Most of the cases, no. But sometimes you have to pay to learn. You have to pay to be early in some of these things. So I would rather, even on that, spend some money, make sure that it's part of our R&D. We're learning about it. We're close to the people who are developing the right way. We're making strategic partnerships with some of these folks, right? So down the road, whenever they get to the right solution, we're very close with them again. And yeah, that's how we're doing it. And just to go back, I remember one thing we started talking about, I think it's important to highlight. Like the other thing we're seeing through, which is related to the topic we were just saying, another thing we're seeing through Swan Institutional is it's opening a whole set of conversations with public miners, hardware companies, right? Everybody that you can imagine that it's out there is coming to us. And since we are miners right now, it's a great angle because, gets on the table with them. We talk about how to maybe restructure their deal in the same way that an investment banking would do for them. But we also come with the partnership side and say, and by the way, if you guys do this and develop these things, we can actually sit at the table with you. We could deploy hash rate with you. We can help you with different things, right? So we're seeing a lot of that. And I think that's going to be a huge business for Swan. As we look, I've been telling this to a lot of people, like as I look into what's happening in the Bitcoin ecosystem right now, it reminds me a lot about what I saw in banking in like the late 90s. It's very incipient. People really didn't know what all these derivatives were about and what was about to happen, right? And how that was all going to explode. We had feeling that was going to be big, right? But people had no idea that the derivatives market would actually become bigger than the actual market itself by several multiples, right? And I think in mining, we're starting, and in Bitcoin in general, we're starting to see that. And the reflection is that there's a lot of talents that it's coming here, right? A lot of people that historically would prefer to have gone work for a bank, right? Or to a large organization that want to work in this, because there's not only will give them the intellectual challenge, the intellectual, I think, learning path that they need, but also, a lot of upside, because if this really takes off, right, we're talking about a whole new industry being born, which is for early entrants like us, there's massive upside usually.
I want to move over to pools now and give you the floor. What was happening with your guys' pool decisions? The ocean thing was definitely interesting. And I will say, I did call on a podcast a few weeks ago that I thought Ocean Pool would have about 10% of the network come 1 year from its launch. And you guys are really helping me out with my far bet there, because you just threw some hash rate at it the other day.
Yeah. I won't confirm or deny that, but I think Corey gave some hints on his tweet. But out there,
he did tweet about it, so it's kind of right there. But yeah.
So, as I said, we're very data oriented. So I created something where I basically, I look at this every day. I have a Sankey chart that, starts with the hash rate, starts with the ASICs. How many ASICs are online? How much hash rate is being deployed, right? Where is it going to? Which pools it's going to? And then you can set it by time frame. So let's look at the last 24 hours and say, okay, so I deployed this amount of hash rate to this pool. First of all, is it matching with what the pool says? Okay, it is, fine. Now let's look at, on the pool side, how much we're receiving compared to what it was expected, right? And I think when we talk about most of the pools out there, the problem is, and this is why, a lot of the comparisons I see out there between Ocean and other pools are not apples to apples, because you need to pick a period of time. So let's say we look in the last day, and I would look at the pool, right? Pick a random pool. And I would say, okay, this pool found this many blocks, right? This is how many transactions that they were there. Here's how much they got in Bitcoin rewards. Here's how much they got in transaction fees. How much did I receive compared to that, right? The numbers never match. Never. They never match. The divergence are huge. And if you get longer periods of time, right? So I started getting very paranoid about this. I may be like 3 months down or 4 months down on our operation, because there was a pool that we were using. And as this wasn't a problem when transaction fees were low, and also when they were not that volatile. We went to a period of time when transaction fees became very high, right? In some cases, higher than the block reward itself, and very volatile. So in an hour, they're 100%, in an hour, they're 50%, right? So they're all volatile all over the place. which gives a lot of room for the pools to play games around this, and they know that, right? So they will look at the past day, they'll say, okay, this is how much we mine, here's how much the average transaction fee was in a day, and people may or may not know, exactly. And a lot of people don't run the numbers, they don't run the calculations, right? And when you look at the numbers, as I said, diverge a lot. So when I looked at this pool, first of all, we disconnected them immediately. Like as soon as we found out, like just switch all the miners out of there, let's go somewhere else overnight. And we did. It was, in one day we were completely out of or even less than that, we're completely out of that pool. Which there's a message there for pools, right? Don't play games because you're going to get spotted. People are going to find out and you're going to lose hash rate eventually, right? The smaller miners may not look at it. They may not, pay too much attention for it. But again, this is a pool that lost a few extra hashes because they were playing games. And some of them, I think it's on purpose. Some, I think it's not on purpose, right? So we had another pool, for example, a small pool that we know was doing merge mining, right? And I think what happened, this is my theory, because there were, whenever volatility of blocks became very high, you'd see that the merge mining pool would actually drop in terms of revenue compared to what you would expect. And I think the reason for that is, though, whenever they're deploying hash rate to other places, they have to make an assumption of how much block rewards are going to be in Bitcoin, right? And those assumptions are always going to be off if you have very high volatility. So and this is just to prove the point that I think high volatility in fees is also another problem for miners to track, right? It makes the waters murkier, so it gives more space for miners for pools to play games, right? And then fast forward, Ocean came out, right? And right out of the get-go, one of the things that caught my attention is the fact that, one, there's full transparency. So we may like or not like, the way that they're creating their block templates, right? But one thing is for sure, I know exactly what it is. And I know exactly for the next block, I can actually see how it's going to be constructed right now. And there are no games being paid, right? And another thing is whenever they find a block, whoever is mining with them gets directly from the Coinbase. It doesn't go anywhere else, right? It goes directly to the miner. So that was initially what caught my attention with Ocean. And in our spirit of trying everything, so we definitely need to deploy some hash rate there. Let's see how this plays out, right? They have, I think people conflate some of the issues around Ocean, and a lot of people throw out, but the block times are uncertain and the luck element still plays a lot. And it's true. Like in the beginning, it was even bigger. Like they went almost a month without finding a block when they had very little hash rate. It's funny because I think they found a block like on one day after launch day, right? And then another block
really fast.
But it's
and then
luck,
nothing
right?
for a bit.
Not luck, but it's probabilistic. So at the end of the day, variance tends to reduce as you get in longer periods of time, and also with more hash rate being deployed. What we've seen with them, I think, since there was somebody deployed more hash rate to them, is that it's been pretty much on much closer to right now. They're expected to find a block every, I think, 2 days and 20 something hours, right? And it's been happening exactly like that. The variance has been very, very low. Again, that may be luck, but the reality is that more and more hash rate they get, the less variance they're going to have. In their case, I think they get a lot of scrutiny for something that also, we kind of are in the same boat when we see that, and it's something we like. There's a little bit of paradox in transparency, right? Whenever you give more transparency to people should be happier about that because they see exactly what we're doing. But in a lot of instances, it actually leads to much more questioning, right? Because you're opening the door to different things and people start questioning different things and start to try to understand the detail of the detail. So whenever you give more transparency to people, you have a short period of time in the beginning where that leads to all kinds of different questions, more confusion probably, right? But the long term, that leads to trust. And by the way, this is exactly the same way we are with everybody at Swan, with our investors, right? We give transparency sometimes too much transparency internally of everything that we're doing, but we always prefer to err on that side than on the side of not being transparent enough, right? And that leads to questions. That leads to people asking you, the tough questions, and that's fine, right? And some of them they're going to agree with, some they're not, but long term, they're going to know that if at least I know if I'm getting less fees with them, that I know exactly why I'm getting less fees with them. The other thing that really caught my attention about them, which makes all of this that we just said muted, because very soon they're going to give us the ability to construct our own blocks, and we're going to be able to construct the blocks the way that we want, right? If I want to prioritize Swan transactions, I will, right? It doesn't matter. I mean, we will construct it's not going to be economical to do that, but maybe we will, right? And I think one of the things long term, right, in the future, I think people are not paying enough attention to. I think Bitcoin has scarcity in two different areas, right? One is on Satoshis, that's the obvious one, but there's scarcity in block space also, right? And that's becoming, I think, more and more relevant and more important. Long term, there's going to be a market in some sort of way for block space. People paying to accelerate, to get in front of your queue, right? People, doing all different things that we don't even think about right now. The same way that I told you about the development that I saw in derivatives in the 90s, going through the financial markets. There's no way we thought about, the hundreds and thousands of different derivatives that are going to come out. We knew that there was going to be a marketplace for that. We could only think about call options and put options. Actually, only call options in the beginning. And then it developed in and then, of course, it went all the way to the craze of too many derivatives. But the point here is that there are a lot of things that, we just don't know what we don't know. And as in any new technology, the use cases, they're usually much bigger than you can anticipate in the beginning. And we want to have a stake on that. We want to participate on that. We want on that. We want to make sure that we understand how it works. We understand how to create the blocks. We understand if there is a market on that. We are able to participate on it. And Ocean just gives us the optionality to do that. All of this being said, as I said, again, we're going to take control again of block creation, and which is super important. I think miners should take control of that again. And if you actually look at the numbers, right, and if you look at the blocks that they've mined, the differences are not that significant in terms of transaction fees. On average, they've been lower, but it's not nearly, it doesn't justify all the noise that you get there. If we had the discount in fees, just by, 10, 15 basis points in the fees that we had with them compared to what we did in other miners, it would already justify using them. So at the end of the day, it just makes, this is like check. It makes a lot of sense to use it, right? Are we going to be, go out and deploy all of our hash rate to a single pool? Never. And that's true for Ocean. That's true for, it's irresponsible to do that. But it would also be, I would be breaching my fiduciary duty to my investors if we weren't using them along with other pools, right?
Would Swan ever launch its own pool, you think?
We've been thinking a lot about that, like what Marathon has done, which is another interesting thing, right? I was listening to Fred, and he was saying exactly that. It's like, we launched, and we were actually surprised that it became more profitable for us in terms of like the transaction fees and everything else that we receive by having our own pool. In a model like Ocean, I don't think there is a reason for us to launch our own pool. The only reason why I would think about launching our own pool was if it gave us control of block creation, right, compared to everybody else. But I can do that in isolation, or I can do that with Ocean, which I still going to have the same, functionality. And I have the added benefit of having other miners coming in and, contributing hash rate as well. And maybe they find a block, I'm going to get a piece of that as well. So I think you end up with a better model than just trying to do yourself. But again, it's early to make the decision. This is where I am right now. But I think if there's one thing I've learned in the mining industry is that your mind is you're gonna switch opinion like 10 times, in a period of like 5 days, and then you're gonna land with something. So.
Gotcha. Okay, so let's finish up with those questions and go into future stuff. You guys are trying to go for 8 exahash. The halving is less than 100 days away. I think we're like 85 days or something like that. What are you thinking about as the brand new operator of this for almost 5 exahash fleet that you're trying to get to 8 exahash? What's keeping you up at night? What are you guys trying to prioritize for? A lot of the cards have already been dealt, right? A lot of that's already been done, but you still have a little bit of time. And then post-halving, there's certainly going to be a lot of volatility or chaos, or at least where I'm thinking there could be.
Yep. So the first one I mentioned already is making sure we optimize our fleet, so that it being like front and center of everything we do, going out there, every single site, optimizing the machines, make sure we can get as much juice as we can out of them, with the current setup that we already have. This is the easy picking for us because it's out there, it's deployed, right? And the quicker we do that, more Bitcoin we're going to get, ahead of the halving. The second one is to make sure that, we have low energy costs. We continue to have low energy cost. So some of the contracts that we've done, they're shorter term contracts, and we're already planning. Okay, they're gonna mature, before the halving or a month or two after the halving. Where do we go next? So we'll be building bridges to other places internationally in the U.S. as well to make sure that we have some room there. Another thing we've been doing more and more is we now starting to go down and actually, looking to getting some of the sites and having our own infrastructure. So we'll be building that. There's a first project we're working on that, securing capital to do that right now, where we're going to control the site, from the bottom up. And, it's also, without getting too much into detail, it's a very cool project because we're recapturing the heat to, potentially warm up greenhouses and other things like that. So it's something, again, potentially could lead to even lower energy prices than what we already have, even if we don't do that. So these are things we're looking at right now, is how we can make sure, going back to what I said in the beginning, make sure that we keep, our cost of capital low, energy prices low, and then the rest we don't control. Let's see what happens with the Bitcoin price, what happens through the cycle. For all of us have been on this for a long time, that's completely unpredictable. How many times I've heard that, after the last halving, everybody was saying, yeah, difficulty is going to drop because a lot of people are going to drop out, and, it didn't. If you really look into a long period of long-term chart, the only period we saw a drop in hash rate was China banning mining, right? Other than that, it's just a straight up chart. And so there's no reason for us to think that that's going to change. I think the mining business is still super dynamic. There are a lot of opportunities out there. People can still move around, right? So it's hard to see a scenario where difficulty drops significantly, which, again, beautiful for the network. This is exactly what we want. And price, man, I mean, like in terms of price, even before mining on Swan Research, I always said I don't make any price prediction. I think anybody who does, they're destined to be wrong because it's a very nascent asset. We're in early stages of adoption, right? And Bitcoin is a fraction of all of the big monetary assets out there. Bitcoin eventually is going to capture, monetary premium from gold, real estate, stocks, bonds, right? Art, all of that. And eventually, if it does, even at the very small margins, we're talking about, an order or orders of magnitude higher than where we are right now. So me trying to predict if, price is going to be at 40, 60, 100, doesn't matter. Like long term, I can tell it's going up.
Okay, let's finish with the big question, which is public listing. You guys hinted at that. Well, it kind of actually like came out and said it. Corey tweeted about it. I believe it was in the press release as well, saying that Swan is going to pursue publicly listing probably this year. Sometimes it takes a little longer. Also, it's a market timing event. I want to get like the high level overview for how you guys are thinking about that. Is it a financial services firm first? Is it a mining pitch first? Is it some sort of combination of those things? Is there more things coming up? And then second part, I want to get to kind of like the ideology behind Swan, Bitcoin only, Bitcoin first, and becoming a public company. Does that change once you go into public markets and you have different fiduciary duties? So I'll start with the first part. How are you guys thinking about going public? And when are you guys going to start like really cranking the engines on that?
Yeah, if you don't mind, I'm actually going to flip it because I think it starts from the last question. We are going to continue 100% Bitcoin only. This is the differentiator for us. Everybody that it's at Swan has, the Bitcoin only mindset. So if we change that, we kill the company, right? And I would be one to jump ship as well if we change that. So that's definitely and absolutely not going to change. I think because of that, we've built a very strong brand and a very strong flow of talent into the company. So all of the other things that I told you, mining, financial services, all of that, that's all irrelevant if we don't have these things, right? So this is what made Swan from the beginning, is our people, our brand. It's quite interesting to see. This is the first time I see a company where the brand and the network and the distribution was built before a product, right? Usually you have a product and then you build everything else. This was completely upside down, which is great. But we have no intention of killing that. If anything, we want to capitalize and monetize on that in the right way for everybody. So that kind of answers the last question. As we go public, this is the primary reason why we want to go public is because we think it's important for Bitcoin. We need to prove, because we think this is the right move, right? We know this is now we're seeing it and we're proving it, that being Bitcoin only, it's very profitable. I would argue that, maybe in the short term, maybe I even question that it's not as much profitable of you trying to do every different thing, right? But long term, I have no question this is the right move, because we're gonna, first of all, we earn this for the monetary, aspects of Bitcoin. I don't think there's any competition anywhere close to that on the monetary aspects. If you want to create, a payment company that's going to be based on rails of, token, I don't care about that. That's a completely different business than what we do, right? And good luck to you. But our focus is on, again, making sure that the best monetary asset that was ever created to mankind continues that way. And that, we get exposure to our clients and to our investors to that asset. It would have been, for example, very simple for us to create a trading platform, right? Very simple. Like, we never did because it's not the right thing to do, right? Even though it would have been more profitable to us. And I guarantee none of our investors would question that, because they know that in the long term, that's the right move for us to be doing. Going back to the IPO, we haven't really decided on timing because, having gone through like process of IPO in the past, you don't control a lot of things, right? We need to be at the right place on the cycle. We need to be at the right place for the investors, right? It's not only Bitcoin price, but we need to make sure that the economy is also doing well, right? The overall market is doing well. So we completely don't control that. What we control is to get the company ready for that. So this is the year for us to get the company ready for that. We're working internally to make sure that everything is in place, right? And to go out there. Going to your question about, is Swan going to become a mining company? No. Like in any new business, right? You're going to start different verticals. Some are going to take off much quicker than others, right? We're very lucky that mining took off as quick as it did. But I'm convinced there's a much bigger business to be built on other verticals that we haven't even started, right? The one-off deals, we're going to have a venture capital, branch that we're thinking about. And so there are all these different businesses that are going to be born on top of this. They're just going to make this a very diversified business in the long term. So, and that's what we're looking to build.
Love it. Rapha, where can people find more stuff about you, Swan Mining, and Swan, or anything you guys want listeners to know about?
Yeah, so I'm mostly on Twitter or X as Alpha Zeta with 2 A's, so Alpha A Zeta. Has been my handle for a while on Twitter. Just follow me there. Swan, it's at Swan, also at X, and happy to answer any questions. Just my DMs have been flooded recently with everything that is happening, but I'll get to everybody eventually. So yeah.
Awesome. And yeah, if any listeners are out there and you have questions about this, feel free to email me at william@blackspace.media, and we can put that in the show notes and or in our newsletter that also goes out right after the podcast goes out. Rapha, thank you so much for joining, and best of luck mining with the new opportunity here.
Thanks, Will. Great being here, man. Thank you so much.